Hello again and welcome to Pearl Magazine. In Hong Kong, small and medium enterprises make up the majority of the city's business economy. These companies usually use their property as collateral for bank loans in order to run their business. But with today's poor economy and falling property values, banks have tightened their lending policies. Alice Khan reports that banks are asking their SME clients to repay their loans early or alternatively are cutting their credit limits.
Call loan, cutting lines and foreclose, and they lost the company.
Banks take away your umbrella in the rain, finally we just shut it down.
Been paying on time, and all of a sudden there's a phone call from the bank asking us to repay 10 million Hong Kong dollars.
A large part of the survival of businesses depends on how much cash flow they have. Large and small companies alike often ask banks for a credit line in order to run their business. Aaron Shum is one of the largest fine jewelry manufacturers in Hong Kong. He has credit lines from 3 banks. Normally, business owners use their family homes as collateral. Aaron is using a few residential properties as collateral for his 3 credit lines. But with residential property prices falling over 20% in the past 2 years, the lending ratio has also dropped.
Usually the loan amount is 40% to 50% of the home value, but now with home prices down 20% to 30%, banks have cut the credit limit. Actually, the problem started appearing 2 years ago. One banker said residential prices dropped. Do you have another home without a mortgage loan? If yes, use this home to do refinancing.
During COVID, another bank asked Aaron to repay the loan early and refused to lend to him again.
We have been repaying the loan. These Chinese banks probably need liquidity, so they just tell us to switch to another bank. They want us to repay the entire loan. It took us more than 1 year to find another bank to give us a credit line.
In March, the Hong Kong Monetary Association called on lenders not to call in loans early.
It is not legally binding. They may not follow it.
Last week, one bank cut his credit limit.
It's a Singaporean bank. It's happening now. We use one home as collateral for refinancing, receiving a total of $22.5 million. That includes a $15 million revolving loan and a $7.5 million credit line to finance our export business. But our clients pay us 60 days, 90 days after delivery. So our loan repayment was late for a few days. Then the bank will use the excuse saying you violated the contract. When I repay all the $7.5 million loan, they won't lend to me again. They don't need to call in the loan, they can use other tactics to cut your credit limit.
Aaron says it's difficult to survive.
This is our showroom. It shows different types of jewelry, diamonds, rubies and other gems. This is an emerald necklace. Buyers only pay 10% to 20% deposit when they place their orders. If I don't have cash flow, I can't do business.
He resorted to borrowing from alternative financial institutions for short-term loans, but with interest rates as high as 40%, just within the legal limit. Executive Council member Jeffrey Lam has received complaints from SMEs, from manufacturers to developers, who said their bank credit line has been cut.
It has affected the whole economy at large because, like property companies, they build, they have to pay for the construction fees, they have to pay a lot of expenses. And after completion of the buildings, there were no market. Nobody was out there to buy. And at the same time, they had to start repaying the loan.
4 years ago, developer Danny Wan received an acquisition loan for an urban renewal project in Sham Shui Po. The loan is to buy out the residents living in the old building he acquired. He also took out construction loans for the project. Developers need to pay back both the acquisition loan and construction loan in 4 years, once they start to sell the project. These kinds of loans are HIBOR-based. The HIBOR interest rate is currently at 6 to 8%. 4 years ago, it was around 3%. Danny began selling the project in 2022 when the interest rate was still low. The units fetched almost $20,000 per square foot. He believed he could easily repay the loan when the loan contract ended in August this year. He's been repaying the interest on time. However, property prices dropped over 20%, while interest rates increased over the last 2 years. In March, he still had lots of unsold units. The bank demanded full repayment of the loan.
Before maturity, I think 3 to 4 months earlier, the bank has deliberately arranged a meeting that he called all our shareholders, legal shareholders, with a meeting with them. And during the meeting, they need us to commit the repayment legally. Otherwise, they will do some legal action, such as, for example, to sell your property, to sell your collateral, to receive your collateral.
The bank refused to extend the deadline. Danny needed to cut prices by 20% to speed up sales in order to repay the loan.
We will tell the bank, also tell the buyers that because better view, better lighting, and more exposure, we have around 5% more higher. We will tell the bank that we will get a high return for this unit.
But would they believe you are able to fetch a higher price? What would they do?
When we send them the price list, they will ask a friendly visit of the project. And I think they really want, I can't say they don't believe, but I think they want to make sure whether the setting or price fulfill what they need. For example, if you say that you really can fulfill, you can get the higher return for this.
Danny sold 90% of the units and paid all loans by the August deadline. But there's another problem. Danny received an acquisition loan for this site and to build another residential project.
But you're not building anything at the moment.
We are applying the construction loan now, but due to the drop of the property market, but they said, sorry, Danny, we don't have the quota to cater for your new project. They feel reluctant to do it and ask us to, okay, I will do 1/3 of the construction loan. Will you please go out to ask another 2/3 for others?
Currently, many developers have left their construction sites idle. This affects the cash flow of the whole industry.
The main contractors, subcontractors, and even the workers, they will say insufficient work. The cash is not coming in on time. It will affect the other jobs. It will become kind of a domino effect. They are also complaining that the bank is tightening the credit line.
The commercial sector offices and street shops are badly affected by the poor economy and high interest rates. Edwin Lee is a street shop investor. He's borrowed term loans from a few banks. Edwin was asked by his bank to repay his entire loan amount 2 years ago.
Been paying on time, and all of a sudden, there's a phone call from the bank asking us to repay 10 million Hong Kong dollars. Of course, I felt speechless, I'll say. It's just, we don't want to argue with the bank, because if you argue with the bank, it means that we don't have the money. Then the remaining 40 million Hong Kong dollars loan may be called further.
He repaid $10 million to the bank in a short time. He says the bank spoke to him regularly to check on his finances.
We tell them how's the rental situation. We also tell them how's our cash level. We tell them about what sort of shops we're looking, what sort of shops we're buying, and what sort of shops we're selling.
Edwin bought these 2 shops in Tsim Sha Tsui at a huge discount from another major investor. His asking rent is $140,000, which isn't cheap.
If we lease out for too low of a cost, too low of a rent, then the bank will see that the loan to valuation of the property has deteriorated. Then the bank will ask us to pay the difference, maybe a few million Hong Kong dollars.
Earlier, HKMA and the Hong Kong Association of Banks set up a task force to handle SME cases.
When their customer have some, news, negative news, or there's any substantial issues happen to that particular industry, then they should learn more and collect more information from the customer. Usually when you repay on time, or even if you can't repay for 1 or 2 installments, the bank will not ask for totally early repayment from you unless there is any substantial issue happen. So,
if he borrowed from Bank A 100% of assets for his loan, then Bank B gave him 80–90% of the value. When this company has trouble, if the owner is willing to repay the loan and he is able to repay the loan in the future, Bank A will offer restructuring for him. But if Bank B doesn't, the SME will go bankrupt.
Michael will close his steakhouse in November after 51 years in business. He's now repaying 2 loans and doesn't want to borrow more money to continue the business.
Banks take away your umbrella in the rain, it's hard to borrow. Better just shut it down. If a client is doing proper business but you cut his credit line, you're killing him. He's working hard and still can't cover the cost.
Michael said his business wasn't doing well with people going north for food and entertainment, so paying a loan is difficult in this environment. He closes in November. After the break, a look at how retail businesses are struggling in this economic downturn. Stay with us. Welcome back to Pearl Magazine. The combination of high interest rates, property prices, and people's changing spending habits have continued to hit Hong Kong's economy. A number of large chain outlets in retail and F&B have closed branches this year, not to mention the smaller outlets that couldn't survive. I spoke to one restaurateur who had to close the first restaurant he opened after 15 years, and the factors putting pressure on the industry.
It's been an institution for Wyndham Street. I think we're one of the only places remaining here.
Restaurateur Olivier Casson is shutting down Pastis in just a few days. He calls it his baby since it was the first of 15 places he opened 15 years ago. It's another casualty in a city that was shut off from the rest of the world for 3 years with no one allowed in except residents. He says he still loves Hong Kong, but it's changed.
It's lacking fun today, and it's lacking some tourism. It's lacking a little bit of something to push toward what we were. And the opening of China doesn't help as well. The weekends are deserted.
Changing habits, a bad economy, and unsympathetic landlords have made it a challenging environment for many food and retail outlets.
Today, we just can't cope with the non-stop increasing of the rent. We feel like there's a lack of compassion, there's a lack of help to make Hong Kong stand again.
Olivier says the difficulties started in 2019.
Things should really start changing when the protest took place. 2019 was a really challenging, and we could start people, demography. It started to be a noticeable change in the behavior, in the habit of the people. And then the start of the COVID just after has been a big hit as well. The direction we took with closing at 6 o'clock, 2 per table, it's been really drastic.
Do you think it changed people's habits?
Completely. People started to not come to the office anymore. We can see the lunch trades being really slow.
Today, a number of regulars are here for a last meal before it closes in a few days.
So we used to come here for lunches quite regularly as well. So it was always a good lunch spot, it was always buzzing. Even the cocktail bar downstairs, Le Boudoir, was always a good scene as well. So it was sort of the epicentre really of Wyndham Street and the going out scene.
And is it special to you?
Yeah, so it opened in 2009, which is the same year that I moved to Hong Kong. And it was like the hot French place when I first arrived. And I've been coming since pretty much the beginning. So it's like tied in with my own Hong Kong. Yeah, so sad to see it go.
Pre-2019, Olivier said his restaurant saw a good lunch and evening trade.
A lot of locals, a lot of foreigners, a lot of international people. Here, Pastis was a big French institution as well. I guess there's a lot of traders and brokers along Wyndham Street, down in Central, down in IFC. So it's been a bit of a melting pot, coming to Pastis, meeting people. It was pretty much open at the time.
Post-COVID, Hong Kong was relieved to see opening times, group gatherings, and travel finally back to normal.
A lot of people want to travel, they want to spend offshore, and we have a really strong Hong Kong dollar because of our peg to the US dollar. So if you are asking anyone where they're going on the weekend, you see a lot of people going to Japan, a lot of people going to Thailand. So the Hong Kong dollar is getting you a lot further.
And while Hong Kongers are spending their dollars in other cities, it seems like the rest of the world is used to not having Hong Kong on their list of destinations. The government forecasts inbound tourism will be about 70% of pre-COVID levels by the end of this year, but their spending might not be at the same levels.
The Japanese come in for shop, and then you figure out, wow, the things are so expensive in Hong Kong, right? So they really hesitate to shop more here, right? And mainland Chinese, the Chinese yuan depreciation is also have an impact, right? That they will also figure out, wow, Hong Kong, the things here is even more expensive than they thought, right? So they also turn more cautious. It's not just shopping, right? Even hotel, for example. So they may not stay longer, right? Because the hotel price looks really high, right? So they will stay in Shenzhen versus stay in Hong Kong.
Retail sales are down by almost 12% this July year on year. And while people aren't shopping, it looks like they're also not going out at night. This was a normally busy area in Soho. It's a Saturday night and it's the end of the month. And yet so many places are empty. You can see the pressure all over the city. Lang Kwai Fong Institution Insomnia shut its doors after 25 years last month, followed closely by Outback Steakhouse, Urban Bakery, and Pret A Manger, who have all closed branches. So have retail outlets Price Right and Tom Lee. Strategy consultant Benjamin Quinlan says the changes we're seeing are structural rather than cyclical.
We had the big expat exodus, everyone knows that. We have a new talent scheme, which has obviously brought in a whole bunch of new talent, but it's replacing a lot of what you would call the Western talent now with Chinese talent. Different spending behaviors, different consumption patterns. A lot of the Western expats would come to Hong Kong on short-dated contracts, and they really lived it up, right? So they spent a lot of money. You also see issues with now Hong Kong people leaving to Greater Bay on the weekends.
Benjamin says that while the Hong Kong dollar peg to the US dollar benefits us outside of the city, there's also a downside.
The nature of keeping the peg means you have to adjust interest rates in lockstep with the US Fed. But Hong Kong didn't have an inflation problem. So what that's done is put an immense amount of pressure on the stock market, on the property market, all these things that are happening at a time where Hong Kong actually needs a bit of that cyclical boost and stimulus. It's actually getting the contra effect with monetary policies.
In a city preoccupied with property prices, the high interest rates and dropping prices are creating a negative wealth effect.
The property price come down by almost 30%, right? So it's really quite a lot and affecting the people, like the shopping habit. They feel, well, I can't lose money in the property market or even somehow in the stock market.
And some commercial owners are seemingly not budging on rent. A number of retailers have cited high rent as an issue. Pure Fitness, Hong Kong's first premium gym chain, which has been in operation since 2002, and Physical, which has been in operation for 38 years, are two such companies. Physical has paused operations while it takes on a new investor and negotiates rents at some of its outlets. LegCo member Tommy Chung, who represents the catering industry, says he isn't optimistic about Hong Kong's economy.
I am quite pessimistic. I don't believe we'll see the light at the end of the tunnel, at least for another 3 years. So I keep telling my trade, be careful. Even for restaurants that are not doing good, don't renew the lease when the lease is up.
And while Hong Kong is hoping to benefit from a more open two-way border crossing with the mainland and integration into the Greater Bay Area, it appears to be a double-edged blade.
Wealth flows into Hong Kong, family office setups. You have insurance, a huge amount of business rolling into insurance from mainland China. So all of the financial services side of the business has been going really strong. But retail, F&B, consumer products, Hong Kong has no edge vis-a-vis China. So you're ultimately looking at an integration story where these arbitrage opportunities that once existed are slowly closing because everything's being integrated into the same.
With cheaper products, services, and lower property prices in the mainland, things look much more attractive for Hong Kongers.
We get the opportunity to buy the things there at a cheaper price. We see that definitely it affecting the Hong Kong the retail sales, especially even for some necessity goods, for lots of the major shopping malls. It's not just the luxury goods.
The government is trying to give the city a boost, offering discounts, drone shows, and opening the border to more Chinese cities.
I think whatever the government does, they do it for the good of Hong Kong. They're trying to help out. I will not criticize.
Would it be better if the government supported the private sector to do those campaigns?
I've always said government officials are not businessmen. I have always said, and they are listening more in the sense that whatever business wants, please make it business friendly. I think we need more business friendly regulations, rules, and even police. As a legislator representing the trade, I keep screaming, hoping that the government would balance politics and business friendly regulations and rules.
Tonight is Pasti's final night before the doors shut for good.
Of course I'm gonna miss it. Of course I'm gonna miss it. But Hong Kong is a dynamic place, so it's still moving. I'm gonna find another Pasti's place.
And despite the tough times, Olivier isn't so easily defeated. With 3 outlets left, he's still optimistic.
But I want to live in a positive note. I want to try to bring some more smile and the last drink with my loyal customer and people who cherish and who help us make this place successful for so long. So I wish to live with a smile, really, and rather than crying about it.
That's Pearl Magazine for this week. Join us again, same time next week. Bye for now.